Hello everyone, and let me ask you, what is your bias on the S&P 500? Personally, I believe most people tend to overcomplicate bias. In the end, trading is as hard as you make it be. You have a job, you have a family, you need to simplify while keeping the odds of your trades high. If you break it down to its absolute core, what is bias? Bias is nothing else than trend. So basically you want to determine, is the trend up or is the trend down? And once you have determined exactly that, well, it is up to you to try and long on the pullbacks or ideally short the highs. Finally, I believe that people are looking for their bias on the wrong charts because they are looking for it on the daily chart. However, if you are looking for a bias of the day, understand this, you shouldn't be looking for it on the daily chart. You need to zoom in a little bit to catch the shifts and changes in market structure and bias, but at the same time not be whipsawed constantly by the ups and downs of the market. In other words, look for your bias of the day on the 4-hour chart and then try and execute, for example, on the 15 minutes. So let's do it. Looking at the 4-hour chart of the S&P 500 here in front of us, what do we realize immediately? There is no clear trend. We are range bound. What are we range bound between? Roughly this level at, I would say, around 4,170 and potentially this low at around 4,100. What can help you frame these levels? I call it my cheat sheet. It also applies for the 4-hour chart. The dark gray shaded areas here are so-called Bollinger Band squeezes. If you look at the first one before this range develops, you see this is the high you would take as an anchor point. The same goes for the low. Obviously you can do it without, but I personally think this gives it a second touch of confluence. Then what you realize is that we've seen one deviation of the highs, a second deviation of the highs, and 2 deviations of the lows within this range that is still ongoing on the 4-hour time frame. So having established that unfortunately we do not live in this ideal world that we were describing here, meaning we don't have a clear trend to the upside or the downside, what can we still do if we want to take trends on the lower trades on the lower time frame? So obviously you can either try and trade these deviations, the extremities of the range on the lower time frame, or if this feels too risky for you, it all comes back down to our target boxes and levels again that we already know from all our analyses. Looking at our current 4-hour range and throwing on our 4-hour levels, then what we do realize is that we have liquidity resting here above us, potentially starting at around 4,170 or smack right on the top of our range, lining up nicely with this range high at around 4,172, and to the downside equal lows at around 4,110 that should be of interest if price works its way further down. What about boxes? 4-hour boxes, if you take your fib and you project it from our last leg up, then you have a bullish target box sitting at the lower end of the range. And the same if you take your fib projections from our highest point and project it down to our current low, again you have a bearish target box sitting rather in the upper third of our range. And where did we just in this last hour reject from? Yes, the beginning of this bearish target box. So let's zoom in onto the 15 minute in our example here today. And what do we see? Once we had at least a trend shift on the 15 minute, we can then start to potentially take a trade. If you project it again from the high, you see where did we reject from? Roughly the area of the target box. Did we have any fair value gap confluences here? No. However, we do know that we have seen a trend shift for the moment. So going back out to the 4-hour time frame, we can assume to at least some of these fair value gaps to be filled in. And then you have two possibilities. Either price will make its way all the way up to the top of the range again, or it will go straight back down to the second target box that you have identified at the lower end of the range. And with that, you should be able, if you take the 4-hour time frame as a basis of your trades and your bias, you should be able to basically find high probability setups more or less daily, or at least 2 or 3 times a week. If you found that helpful, then please guys, leave a like and subscribe to the channel, become part of our community, and I see you in the next one. Bye bye.